we're committed to our price stability goal. We will use our tools both to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched. And we'll be watching carefully to see whether the economy is evolving in line with expectations. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. As I noted, the committee left the target range for the federal funds rate unchanged and reaffirmed our plan, announced in December, to end asset purchases in early March. In light of the remarkable progress we've seen in the labor market and inflation that is well above our 2% longer-run goal, the economy no longer needs sustained high levels of monetary policy support. That is why we are phasing out our asset purchases and why we expect it will soon be appropriate to raise the target range for the federal funds rate.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Just ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everyone. Johnny here. I hope you're all having a wonderful 2022 so far. Let's get right into today's episode. There's a pretty strong inverse correlation between the DXY and Bitcoin, letting us know that should this bullish momentum continue, then we are possibly looking at a pretty hefty sell-off in Bitcoin and likely the entire crypto market. Now, this would make sense with an expected death cross in the near future and the bearish price action we're seeing across traditional markets in response to the Fed's announcement on Wednesday. And should we see another capitulation style sell-off event like we saw in March of 2020, then it wouldn't be surprising to see Bitcoin fall all the way down to around $9,600, a significant price level considering that this is the lowest remaining CME gap on the Bitcoin chart. Considering that the Fed announced that they had no plans on raising rates in the near future, or at least until 2023, a lot of analysts were expecting to see some bullish momentum return to Bitcoin and the entire crypto market in a similar way it's returned to traditional markets. I mean, the S&P 500 responded really well to this news. However, contradictory to this response, we are seeing the dollar actually gain some bullish momentum, likely coming up and retesting this area of former support and confirming it as new resistance before finishing the measured move of this giant diamond top pattern, likely all the way down to 79% on this index. And with the Fed keeping rates low and continuing to fund the American corporate welfare system, continued bullish momentum in stonks is expected. And that is exactly what we're seeing here with the S&P 500 and with the Dow Jones Industrial as well. You've heard of the saying, be fearful when others are greedy and greedy when others are fearful, right? Well, how about bull markets are built on optimism and die on exuberance? The massive amount of leveraged positions opened by hedge funds over these last couple of weeks is nearly 40% net long. Quote, smart money's greed has led to a pretty damn serious risk appetite and the fear of missing out, showing that the mania phase of a bull market is not just for the retail investor. These massive inflows of capital point towards some serious overconfidence in the Fed's ability to keep these markets pushing higher, ignoring the fact that these markets are massively overbought, setting the stage for a pretty epic market crash. The 10-year rate is still heading lower, providing further proof that we're not yet seeing the inflation that we hear about 1,000 times a day. Current high consumer prices are the result of supply chain issues and corporate greed, not a weakening dollar. Now, I'm not saying inflation isn't coming because I definitely think it is. In fact, a strong dollar is really a large part of the reason why Bitcoin is under $40,000, and it'll likely soon be the driving factor in a sell-off we might see across all traditional markets. freeing up enormous piles of cash currently sitting locked in highly leveraged positions of hedge funds and institutional traders, potentially sparking an uptick in the M2 velocity to ramp up as we head into 2022. When the already high prices of limited supply consumer goods and other assets in high demand are driven even higher by a weakening dollar, we're likely going to see some pretty insane levels of inflation, the likes of which most of Americans have only heard about in the news. The S&P 500 right now is testing a 10-year resistance level, and it's at the apex of a pretty large rising wedge with a measured move target of more than 40% below the price. The Dow Jones Industrial is also testing a decade-long resistance level, and it's also nearing the apex of a large bearish rising wedge. Now, a major liquidity event across all markets will rapidly increase the demand for the dollar, taking the DXY up towards the high 90% range. Now, while we're still not convinced that we've seen the bottom of this correction, we are considering the probability that $22.8 thousand was this local bottom. Now, aside from an unexpected massive decoupling event, if we see traditional markets crash, then it's pretty likely that we'll see Bitcoin and the rest of the crypto market come right down alongside of them.
The Evergrande situation, it seems very particular to China. There's not a lot of direct United States exposure.
No.
The big Chinese banks are not tremendously exposed.
That's just being silly.
While we must monitor carefully for a spillover effect on financial markets globally, at this point, I don't see this developing into a global crisis.
Don't be silly.
One of the reasons that people are worried around the Evergrande scenario in China playing out and what it could do to the crypto markets is because of what's backing Tether. So it's one-to-one, but it's not backed by dollars. It's actually backed by commercial paper, mostly out of China.
So a lot of us are asking, what exactly is commercial
Paper.
Basically, its purpose is for companies to meet their short-term financing obligations. This could be for payroll, supplies, anything like that. So for instance, if an airline is managing its receivables and it doesn't have the cash coming in to meet its short-term needs, it still obviously has obligations to continue financing, or continue operating, I should say.
Now, Tether usually prints USDT as the crypto market rises in response to increasing trading volume, as they did earlier this year when prices were heading up towards that $64.9 thousand all-time high. However, they continued to print more USDT after the prices started to fall, printing about $15 billion worth of more USDT in late April into June when the prices were starting to fall. Now, coincidentally, this was at the same time that Evergrande and other Chinese property developers were starting to report risks of default, making it seem like Tether could have been providing them with the much needed liquidity required to pay their debts. But then in July, Fitch Ratings, one of the only 3 ratings agency in the US recognized by the SEC, came out and said that Tether could disrupt credit markets due to its commercial paper issuance. 1 month prior to that, the Boston Fed president announced that stablecoins, and specifically Tether, could trigger a crisis in the financial markets. So, how close are we to a possible catastrophic crypto crash? Let's go ahead and take a look at these charts. Well, looking back, it looks like we are about a month away from the spot price top and the beginning of said catastrophic crash. We were pretty confident that Bitcoin had already seen its all-time high at $64.9 thousand back in April, and honestly, we really didn't see that $69 thousand new all-time high coming. But in hindsight, it really did make perfect sense. There were clearly a lot of bets that Bitcoin was going higher, but there were also a lot of bets that $64.9 thousand was the top, with futures open interest absolutely skyrocketing in mid to late September. Now, whether this push to a new all-time high was the result of open interest due to ETF speculation, or if it was the short squeeze of the fucking decade, we honestly will never know. Now, if you don't understand why the futures market plays such an important role in the volatility of the spot price, shoot a comment below. I'm working on a video about this, and I'd really love to know what questions you guys have. Also, if you only ever look at the spot Bitcoin chart, Bitstamp, Binance, whatever, the idea that a $100,000 Bitcoin was imminent really did fit into that story. Finding clues otherwise really wasn't that hard though. You just had to climb out of the bubble and look, not even really that far. All of the correlated markets we've been talking about for the last 2 years are all saying the same thing right now. Then there's this.
It's now time to not only open the door to futures-based Bitcoin products, but also physically backed products. And so we anticipate filing with our exchange partner, the New York Stock Exchange, as soon as we have that demonstrable evidence and these products begin trading in the US market.
The Grayscale Bitcoin Trust price chart on the daily time frame, or GBTC. Now, does this lower high and lower low in this chart suggest that the spot price of Bitcoin is probably headed lower? If you consider the fact that GBTC is the only means for traditional investors to get exposure to physical Bitcoin, there's no question about that correlation. The price performance of GBTC is directly correlated with the spot price of Bitcoin and vice versa. Then a lower high followed by a lower low would seem to suggest that we are headed directly into a bear market. Nothing is for certain though, and these probabilities are never 100%, not even close, but at this point, we have a lot of confluence for the bearish idea. Now let's go ahead and take a look at Bitcoin spot. This is the Bitstamp chart on the daily time frame, and right now we're really just waiting for our orders to fill that are well below the price. Now, should price begin to show signs of a reversal, we will be ready because we'll be keeping an eye on retests of breakout prices and looking for bullish divergences. And should Bitcoin get back above the 89 weekly exponential moving average and hold support at 37.3K, then we'll keep our eyes out for possible pushes higher. But until then, again, we're really just waiting for prices to fall. Now, if this bull market is going to continue, then price will need to catch a bounce at the second aggressive buy target at $30,700. We did get a bounce here at my aggressive buy target at $35,790, but we did not have any open orders at this price because really price action just is not looking that strong. We're not looking to enter on any of these aggressive buy targets here, just because I really think we'll get an opportunity to buy a lot lower. The bearish confluence right now is louder than any of the bubble mania, especially with the Fed's stated policy for the next couple of months that we just heard about yesterday. Now, just about all of my trading capital is out of positions and sitting in open limit buy orders for Bitcoin that, again, are well below the price. There's also a lot of confluence at these limit buy order targets. Most of them are buy open CME gaps. Our first is at $20,739,000, our second at $15,338,000, and our third all the way down at the lowest open CME gap at $9,615,000. Now, please note that these buy targets are the median of a range, so we place multiple buy orders within said range. That's how we accumulate during bear markets. Now, regardless of how long this bear market lasts or where Bitcoin finally finds its bottom, there's a lot of evidence that we will see a pretty swift and strong recovery and prices much higher than really anyone is going to expect. Depending on what the Fed chooses to do here in the near term will really determine whether or not this potential scenario plays out sooner or later. One that may initially take the crypto market down to some pretty deep lows, but would open the door for Bitcoin and cryptocurrencies to truly revolutionize finance as we know it, keeping our $350,000 plus price prediction for sometime between July and November of 2022 very much alive. Now, I will be taking some time off, but the Telegram chat will stay updated daily. New vids on TA and investigations into things like how the futures market influences the spot price will be few and far between, but I will be back here and there. We'll be doing a lot more educational videos in 2022, just waiting for this bear market to end. The entire technical analysis basic trading course is now available on YouTube for free. Links are in the description below, so make sure you use this time wisely and learn technical analysis so when the next bull run comes, you are ready to go.